Let's kick off with the National Bank of Kenya's first half results, posting that 22% year-on-year and a 76% quarter-on-quarter decline in first half earnings per share. Many have been warning about the impact of lower valued government securities on banks' bottom lines. We've seen that in National Bank's results there. Profit before tax falling by 8%. Apart from the falling value of those government securities, from an operational point of view when it comes to loans and advances and non-performing loans, how's that bank performed?
Actually, it did quite well. It did manage to grow its income. Its interest expenses actually declined. They rely a lot more on customer deposits and not on wholesale funds. So they were really able to adjust on their cost of funds, and that one actually came off. And even on the operating income, that also they grew that quite well. So apart from that loss on government securities, which they have very little leeway on, the bank did quite well.
Cooperative Bank posted some impressive numbers. Profit before tax up 43%, earnings per share up almost to 42%, but that bank also hit by the value of government securities declining on its books. It has disposed of some of its interest rate products. Going forward, could this bode well for earnings for the full year?
I think for it, the rest of the business, accounts for a bigger proportion. So it appears to have been less affected by the overall revaluation of government securities, So, they grew their customer numbers quite strongly. And on overall, the business was well supported by interest income and as well as non-funded income. So it generally performed better just because the rest of the business accounts for a far much bigger proportion of the overall profits.
So let's just take a look at those stocks and the value they're trading at the moment in the banking sector. We've had results from Equity Bank, Barclays Bank, KCB, Co-op and National Bank of Kenya. Of these banks, which are you most bullish on based on first half results?
I think Barclays Bank is one of the interesting ones. Earnings were down about 2% net profits. Quarter on quarter, it appears to have done quite well. But obviously this year, investors have to factor the one-off earnings last year on the sale of the custody business. So this year, on a year-by-year comparison, it's not going to be very good, and that's going to be more severe, in the second half, at least as we get the third quarter numbers. Equity Bank, quite strong earnings, and we think that's very supportive of the share price. So overall, I think the sector has reported better than expected performance, but obviously second half is much likely to be a much more difficult period for the sector as a whole.
And Barclays CEO coming out warning about soaring inflation and high interest rates and that impact on full year earnings. Is this a concern, how the macro operating environment is going to start impacting their earnings?
It's a concern generally, but at the moment, there's very little, say, the central bank could do. I think, on the fiscal side, government is doing quite a lot in trying to mitigate some of the challenges that the economy is having. So, the Minister of Finance has invested quite a lot now on food, and we think that's going to be positive, especially towards the end of the year. But obviously, interest rate spreads are going to thin, especially as we go into the second half, as wholesale funds are now putting, most of their funds now to government securities. So unless banks actually raise their interest rates to their best lending rates, and they've already been doing that, it's going to be very difficult for them to get cheap credit and be able to lend that at affordable rates. So I think on overall we are seeing higher interest rates in the second half, which could also impact on provisions and so forth.
Let's move on to the breweries sector, East African breweries. A lot of foreigners taking positions ahead of that company's full year results expected soon. There's some negatives and positives facing that company. You've got more regulation in Kenya around alcohol. The drought has also put a lid on volumes growth with disposable incomes under pressure. You've got the entry of SAB Miller and the threat that it poses to that company. It's also still trying to find or needs to find around 11 billion shillings to buy the remaining stake in Kenya Breweries, but this will mean increased volumes growth and perhaps a bottom line impact there for the company. What are you taking on all these developments and how they're going to play out in the company's results?
I think it's going to be a challenging period for it. I mean, obviously, the last 6 months will probably be the period where we've probably seen the full impact of the Alcoholic Drinks Control Act. And we think that impact is likely to be quite negative. If you're looking at how they're going to finance some of the M&A transactions that are underway, Kenya Breweries is one of their key subsidiaries. And they're looking to purchase 20% back from Sub Miller. And it's a significant amount. If you combine the sale of the TBL stake in Tanzania, it's not going to be sufficient. And last year, they also spent quite a significant amount of their cash reserves on purchasing Serengeti, a controlling stake in Serengeti.
Have they indicated where they're going to find this money from? Will it be debt, equity financed?
No, they haven't. I mean, my natural instinct would be equity finance, probably a rights issue. But with market conditions, they might be looking at debt. But at the current pricing of debt, the impact would basically be neutral just because of the cost of debt.